And good afternoon. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index for Tuesday, May 11th, 2021. As we left off yesterday, I am in the process of counting a decline. And it's going to end up being an ABC decline. And depending on what degree, of course, it's going to depend on how deep it's going to go, how big it's going to be, et cetera, et cetera. And that leaves us back here where I have placed a 5 there. Now, a 5 of what is yet to be determined. And because we can take this all the way up to where we've completed intermediate wave 3, and we're going to start dropping in intermediate wave 4 correction, which should take us pretty deep. And as a matter of fact, should take us down to this level, at least down to that level, at least down to 4,002. So having said that, let's get busy with today. So we're in that first leg down of a corrective phase. We're not yet, the market hasn't let us know yet as to what degree that is going to be. So where are we within this initial count? And of course, I'm counting this as a 5-wave structure. And so we always start 1, 2. Then we're going to drop into a third. It begins to subdivide. 1, 2, 3, 4, 5 of 3, 4, and then 5 subdivides as well. And we can put a 5 down there to complete this initial 5-wave decline. And that being the case, we would then expect, so whether this is going to be labeled wave A or labeled wave 1. Right now, I would call it wave 1. That's always going to be my preferred. My preferred is that this correction is going to start at a 5-wave decline for wave A. So I would label that as wave 1. But we need to say wave 1 or wave A. We don't know exactly what the overall structure is going to present. If it's wave 1, then I'm looking for wave 2. And wave 2 would then be expected, and I want to just put in Fibonacci. And we're going to go back up to this high at 42.38. Where is that one? Right there. 42.38. Come on. Come on. Oh, it's going to be testy on me now, right? Come on, please. I'm going to go down to the 15-minute. How about that? I bet I can get it on that. My computer just gets real testy in trying to do this. It still won't do it. Come on. I have a drawing. Come on. Come on, like that. Now we're going to take it all the way down to here. 375, I'm going to mark it right there. And so what we really would be looking at is as a minimum 0.382. And it's almost reached that. And I don't know, it could be done. It looks like we had an ABC, but you see, this is awfully congested down here. And I'm on a 15-minute chart. And it was a pretty nasty little, like, oh my God, up, oh my God, down. So it was what we call a box of doom. Or if you're in a trade room, I would be calling it a box of crap, because it presents some very difficult situations in trying to trade, because you're not really getting the moves that you want. And so it's very herky, jerky, up, down in a very tight range. And that's pretty much exactly what it did. Although after this, it slipped out. So whether that completed 2, right? So wave A, wave B, wave C for wave 2, yet to be seen. We're going to leave that open. And then this would be the 1 and the 2 for starting our next 5 waves down, which if indeed it was, would be in the shape of either a C wave or a 3rd wave. Both carry the exact same type of characteristic where we'd be looking for acceleration to the downside. We'd be looking for some intensity. It's very focused. It's going down with a small wave 2 and small wave 4, but it's basically going to go down. Now, it ain't doing it yet, but we've just started Globex. So we're not down awful, that much. We're down about $5 from the close. If it's going to be a continuation and we're going to get an additional C wave, let's say, of this wave 2, then our next line would be up here at the 50. I'm sorry that we have this conglomerate of numbers, but they coincide with different things, and I will take one off. So we can have limitations on this because I really would not expect this to be flying high again, if indeed it's just corrective. So we're going to allow for a move possibly up to 4170, but we again, I think 4150, 455 up to 60 should contain it and then turn it lower again as this next the next segment of the decline comes in. So continuation downside, remember, that's kind of where we're kind of looking for well, actually now I think I would have to go further. That would be 1.618, and now I'm going to do something a little different. Get rid of that. And we still have that zone down here. And that's where I actually was expecting maybe this initial decline would finish. But I now feel that it's likely going to come down here into this 4,000 level. And that could happen, of course, over 1 day, 2 days, whatever. We did see this morning when we walked in that the S&P was down over 50 points. It was down at 1.60 bucks. So we know that the S&P is very capable of making these larger moves. So the volatility to the downside really comes and kicks into place. So we could get that. But that's where I would be looking, here to here. So that zone is 4,020, 22 down to 4,000. And I right now I would expect 4,000 to hold, but it could dip below it, and then that would just really bring about, I think, a lot of sellers, a lot of buyers. We might see some sellers are going to take it down there, but I think that when it gets to that big round number, it could provide a lot of support, and buyers just step in, and then boom, we're off to the races in another corrective move. So that's kind of our marching orders, where I'm making a very clean attempt. I've not added the labeling here because I want the market to continue to lay out what the intents are. And I want to just clean this up, so I'm going to take this all off for right now, so I can just watch exactly and catch all of the different subdivisions, because they're going to be very important. And this, again, needs to resolve itself and tell us what's next. And that's what I'm going to leave it for today. The next update will be Wednesday the 12th.